special guest to break this all down, and most importantly, to share, because I know a lot of you aren't into crypto, maybe don't have crypto, but what does this really mean for you? Number one, what does it mean for you and your dinner table? And what's the possible contagion that can take place? So she's the co-founder of Tokenwise, got an extensive background in the capital markets. Jeannette Spaulding is joining us. And Jeannette, great to see you. Welcome back to the show.
Thank you, Chris. It's great to be on the show, as always.
So you and I haven't really had a chance to visit on this. I just want to know, like, your initial reaction when you saw this meltdown of FTX.
So a couple things ran through my mind. One is feeling empathy for a lot of the folks that got caught up in this. A lot of people have lost access to their funds. There's a whole company now that employees are in the process of losing their jobs. So my first thought is empathy towards folks who have been affected by this through no fault of their own. I think that's first and foremost to remember. This is a human story as well as being, a crypto meltdown story. And then second response and second thought was really, I wasn't surprised. I think there was a lot of writing on the wall around a crypto exchange, and any kind of exchange for that matter, that has such close ties to a prop trading fund. So I think that is really a lesson for a lot of folks who maybe aren't familiar with how financial markets work, aren't familiar with regulatory regimes in finance, is that if we had been looking at the traditional financial markets, that sort of activity, having an exchange with such close ties to a firm that is trading the same assets that the exchange holds. So it's just, and there's no transparency in terms of how the prop trading firm is trading and getting liquidity and deciding what to trade. So that to me always seemed a little odd.
And just for clarity for people, I'm assuming you're talking about Alameda Research, correct?
Yes. Yeah, I am.
Yes. So Alameda Research, if you don't know, is this other firm she's talking about, closely associated, though, 28-year-old CEO. I mean, they're all living in the Bahamas. So let's do this because, again, not everyone's really into crypto. What I want to know from you, because this has been sucked so much oxygen out of the news, take it to people's dinner table right now. Like, what does this news mean for people that are listening right now at their dinner table?
I think it means that, first of all, you're probably going to see a lot of headlines that are very scary, and they are scary. They seem scary. They are scary. People are losing money. There is an industry that's been built around crypto assets, and there's the risk that what is happening with FTX is going to cause negative sentiment across the industry and therefore drive certain assets lower, even lower. So in terms of what you hear in the news, it's all going to be very doom and gloom. And I think that is actually unfortunate because the underlying technology that drives digital assets is still the same technology, and that tech is sound. And so my fear is that people who don't know a lot about cryptocurrencies, what they know about crypto is what they hear in the news, is one, they're going to conflate cryptocurrencies with digital assets. So that's the one first thing that, if you're unsure of the difference, that would be the first area I start to kind of look into and start getting educated on. And then two, just because we see a lot of unregulated activity in certain markets, like with cryptocurrencies, like with these unregulated exchanges that weren't even operating in the US, doesn't mean that anything to do with digital assets is going to be unregulated. And there is actually a lot of activity happening in regulated spaces with digital assets.
I want to get into that. And I think it's really important for people to realize, like, as you think about FTX, I mean, Kevin O'Leary was a big investor. Scaramucci was a big investor. The World Economic Forum was a partner. Gisele Bundchen, Tom. I mean, these were people that you presume have vetted this project very, very well. FTX was part of the Miami basketball stadium, Miami-Dade County, and Miami has now cut ties with them, obviously. But let's get into the regulation piece, because I know that Kevin O'Leary spoke on CNBC recently saying, hey, look, we need to get at least this, I think it was the digital currency transparency regs done. And he says, look, at least that way, then we're going to have a digital asset tied to the USD. He's like, I will use that all day long. It's better than ACH and anything else. Where do we go from here from a regs perspective?
Well, I think and it's funny that it's true. You can name a whole list of celebrities that are known for their involvement in, with FTX and with other cryptocurrencies and platforms and things like that. And I think that's a lot of the reason why people associate crypto with digital assets. And that's like the only thing that comes to mind, is because you do have a lot of marketing dollars that have gone behind a segment of the industry that's probably one of the most risky. That's the thing that kind of kills me. It's like the most risky piece of this industry is where all the marketing dollars have come from, and so therefore that's what people know. But I think if you actually look at what's been happening with regulation, there are two things around regulation. One is there are a lot of regulations that can already be applied to digital assets. So there are these things called security tokens that already conform to the SEC regulations regarding what you need to do if you are selling a security. And security tokens can be used to do things like tokenize an asset like a building, and therefore allow someone to own real estate and own the underlying profit stream that's coming from that building. Let's say it's an apartment building that's collecting rent from tenants. So if you own a token, you can own the right to a part of those economics, and that is a security, but it is sold in compliance with SEC regulations around securities.
If you're just joining us, co-founder of Tokenwise, Jeannette Spaulding, we're breaking down the FTX situation, the meltdown there, the BK, and really what does it mean for you and your dinner table, and then some of the contagion that potentially could happen here. I don't want to bring you into a political conversation, Jeannette, and yet because you know blockchain so well, I just want you to say, hey, Chris, this should be easily able to be found if true. And there's a lot of conversation out there. Like at one point back, I think it was May or March, FTX was associated to a Ukrainian fund that people were using FTX to then move money over to Ukraine. And a lot of people now suggesting that FTX was used as basically just a laundry machine. You don't have to answer yes or no to that, but should it be easy for people because of blockchain to say yay or nay, that's true or not true?
So that is the beauty of the decentralized use of blockchain technology, and why centralized exchanges like FTX are trying to they're taking away actually the beauty of the technology. So one of the reasons why I'm so excited about decentralized finance is that you do have that transparency and that auditability. So when you have a digital asset like a cryptocurrency or like a security token that is trading on blockchain rails, those transactions happen in a transparent fashion. And not only that, but you can go back and audit and see exactly what was happening, where funds went, who owns them, which wallet owns them, et cetera, et cetera. The issue with FTX is that it's a centralized exchange. So it did not do a lot of the things that it did on blockchain rails, ironically. So it was actually not even using the technology that it was purported to support.
Thus, if there's any silver lining in this, is the fact that there is a big opportunity. We've seen a lot of money move into the decentralized finance space over the last week that could become much more prominent, because people are saying, okay, you know what? And continue real quick. We got about a minute left, and I apologize, Jeanette. We'll have to have you back, but just so people can understand, because it does get wonky. What's the distinction between a centralized exchange and a decentralized platform?
So a centralized exchange is really going to, if I want to trade cryptocurrency on a centralized exchange, I'm sending my currency to that exchange. And when I send my currency to that exchange, the exchange owns my assets. They own that currency. And that's why there are so many people now that have their assets that have been vaporized, basically, or locked in bankruptcy proceedings, because they sent their funds to FTX, and FTX technically owns those funds. That's a centralized exchange. Decentralized exchanges, you always remain in control, in custody of your own assets, of your own money. And they say, there's a saying in the industry, not your keys, not your coins. And that is what decentralized exchanges allow you to kind of adhere to.
Jeannette Spaulding, as always, thank you for the insight. If you want to find out more about Jeannette and her company, it's tokenwise.co.